Hi guys, welcome to today's episode of Trade of the Day. And for today's Forex pair that we'll be looking at will be the CAD yen. Now I chose to look at this is because there's a lot of volatility in the oil markets and a lot of brokers are starting to shut down the oil pair that their clients can trade. So we know that the Canadian dollar is actually very sensitive to changes in oil prices. So we want to look at that against the Japanese yen, which has been quite strong recently for as a safe haven. Right. So what we want to do is always to use a top-down approach. So we start out with the monthly, work our way down to the weekly, to the daily, and then we refine our idea on the 4 hours and even the 1 hour. Now, on every time frame, we look for support and resistance level. So over here, we can see that we're on a monthly right now, and we want to focus on the recent prices. All right, we see that price sort of tested this level twice. There's once here, another time here, came relatively close here, and recently in March. So let's just put a level there, right, at this close, and let's call this our long-term support. Now this is quite a strong level, so graphically we can just keep it there. Okay, and what we want to do is to look for a long-term resistance, and graphically speaking we can see that there's a recent swing high here at a 91.64 level. So let's call this our long-term resistance. Okay, and this, we don't just plug this swing high out of nowhere. We see that price has pushed down, and we want to see how far price has gone up before it reacted one more time. So for this, we shall use Fibonacci retracement. Take from this level to this level here, and we open up all Fibonacci ratios. Now we see that this swing high, this long-term resistance at a 91.64, actually reacted right at the 50%. So let's just select that 50% level. And what we see here is that price actually showed a strong rejection of the long-term support. There could be a possibility that price bounce above the long-term support towards the long-term resistance. But for now, we will just do our analysis and we'll confirm the directional bias on the lower time frame. Let's go down to the weekly. Let me tidy this up for you guys. Okay, on the weekly, we see that price is actually on a downward trend. Okay, and how we confirm this is that price makes lower highs, right? And if you were to draw a trend line, we can actually connect the tops. Okay, so what we want to do is to find the weekly resistance to see how far price from this high to this recent low. We want to see how far price can actually retrace upwards. So we'll take a retracement from this level to this level here. We open up all Fibonacci ratios, and we see that at the key Fibonacci ratio level of 61.8, price reacted once, price reacted a second time, and a third time, forming sort of a double top in this area here. All right, so we can use that as a weekly resistance. We select a key Fibonacci ratio of 61.8. We put our weekly resistance here. And let's call this the weekly resistance. Okay, because now price is actually quite close to the long-term support, we can actually call this our weekly support as well. Right? And now we have our weekly resistance, weekly support, which is in line with our long-term support. Let's go down to the daily. Once again, just let me tidy this up. Because the long-term resistance is quite far away, it'll take a few months for price to get there. We can remove that. Now, graphically, we see that there's sort of a resistance at this level here, right? If I were to extend it all the way back, you can see that price actually tested and reacted above. And then when it broke below, it tested once, tested twice, came close a third time. So this is a strong support turn resistance. So graphically, we can actually use this as our daily resistance. So this is the daily resistance. And we see that price is actually holding in between the daily resistance and the weekly support. However, what I'm thinking is that price could make a final push up here before coming back down. But let's look for a daily support first. Now, if we were to change through the line chart, we actually see that price is actually bearish right now. You can see that price made higher lows. However, at the recent price, it made a lower low. So we could very well see that the reversal is in progress now. All right, so let me just zoom into this area and we want to look for a daily support. Now, if you were to look carefully, after price rejected off the daily resistance, it made a push down, came back up and made another push down, right? This zigzag pattern, we want to see how far it can go. So we shall use Fibonacci extension. We open up all Fibonacci ratios. And we see that the key Fibonacci ratio of the 100% falls in line with all this candle close, right? The candle close, candle open. And then the 127.2 is actually close to our long-term support, weekly support. So how we can play this, we just highlight the 100% level, right? And then we put our daily support in. Actually put it here. I don't really like this to be cut, so I'll just adjust it a bit for presentation purposes. And I can call this the daily support. Okay, so now that we have the daily resistance, daily support, and the bias that price is actually going to push down towards the daily support and possibly even the long-term support. So we go to the 4 hour to look for our entries. Right, so now we're on the 4 hour. Let me tidy this up for you. Okay, we can ignore our long-term, our weekly resistance because it's too far away. So we just want to focus on the more recent price. So like I said, price made a low, right? And then it started making a higher low. And it was only recently that price started making a lower low. So when we take note of such things, we actually see that price has already broken this trend line here, right? Price has already, instead of holding above the trend line to make a push up, what price has done is price went down, came back up, broken it, and came back to retest the trend line. Okay, so what we can do is we want to look for an entry to go short, right? Price made a push down and came back up. We want to see whether this graphical level falls in line with any Fibonacci level as well. So we take a retracement, this whole movement, and we see that it falls nicely with the key Fibonacci retracement of 61.8. So this can be my sell entry. And this will be, let me just zoom out a bit. The daily support will be my first take profit. Right? This will be my first take profit. Call it the TP1. And my long-term support, weekly support will be the TP2. So how this works will be my stop loss will be actually at the recent swing high. Now, how this works, let me just call this the stop loss. So how this works is when price comes back up to test this level, I will go short and I'll play down to my TP1. When price reaches my first take profit, I will close out partial positions to lock in some profits and let the remaining position right down to the take profit too. Should price break above the trend line and also above my stop loss, it will mean that this bearish bias is wrong, and I'll immediately go long to play at least to the daily resistance to cover back the losses made in this area. All right, so this is the trade of the day for CAD Yen. Thanks a lot for sticking around, guys. Hope to see you guys tomorrow. Thank you.